making sense of payments. What does my customer need from me? And what do I need to be successful? That's definitely a question that's on the minds of corporates, market infrastructure peers, but even banks themselves. And for us in the banking sector, in 2020, clearly a large part of the demand in the payments and treasury space was very much driven by the effects of the global pandemic, especially in the area of digitization of processes, documents, and also signature procedures itself. But going beyond tactical solutions, which undoubtedly have a considerable importance in the day-to-day interaction with our customers, is that we see a very clear trend in how the strategic role of banks will change, or potentially even expand. And the future of payments is very much at the heart of this change. Today, in particular in the payments world, the traditional providers such as banks are not alone anymore. And, ever more startups, fintechs, but also big tech firms are entering the space. They focus mainly on niche services, but they ultimately aim to disintermediate banks. These players tend to focus on very specific use cases and one-dimensional use cases, or very specific corridors, whether that's in the space of cross-currency payments or international money transfer solutions, the provision of digital wallets and alternative payment methods, whether it's card developers or simply also the technological gateway layer. Often those business models start in the consumer space and then pivot and evolve toward the small cap sector of business banking. Now, these players are definitely attracting a lot of attention. According to the Corporate Bank Insights research report, payments fintechs raised over 6 billion in the first quarter of 21, which is a quarter-over-quarter increase of more than 190%. However, and to some extent contrary to a popular opinion, is that whilst in the SME business space and for one-dimensional solutions, clearly the competition is heating up when it comes to the multinational arena and more comprehensive financial services offerings. I'm not at all concerned that banks in the corporate treasury world will lose or even diminish their specific role in the market. In contrast, actually, I believe that the pendulum is currently swinging back into the direction of the bank providers due to many, many different influencing factors. And that doesn't mean that banks doesn't have to integrate new age technological driven solution. And it doesn't mean that banks can't provide on a white label basis other solutions from one-dimensional players. But it definitely means that the interface that banks have with complex, globally acting companies is as important as never before. And to call out some reasons for that, firstly, the digitization and automation of payment processes and real-time business models. So one of my favorite examples is how, together with a corporate client in the telecommunications sector, we not only developed an automated treasury solution by combining API, instant payments, and real-time data reconciliation as one overarching solution, but we enabled a new competitive advantage for the customer in the Indian market. Instead of having to wait for up to an hour when buying a prepaid cell phone card, as you had to do before in order to make calls to your parents, to your family. Now, with the new solution, it is possible to start that journey immediately after you purchased the credit in the first place. There was a novelty in the market and definitely acts as a very tangible example of how payment innovation or overarching processes wrapped around payment procedures enables new opportunities for corporates. And to me, that is just the beginning. According to last year's annual Treasury survey that together we did with the Economist Intelligence Unit, whilst business models based on real time are still not a given yet across the board, they are definitely growing. And while I believe that singular aspects of such solutions could certainly be provided by new market entrants, fintech and other players, the overarching combination of treasury solutions in combination very much tends to play the most pivotal role in harvesting the benefits, and that's what banks will stand for. Secondly, looking a little bit into this year's survey, the business model transformation continues to be a key theme, and also is something that we as Deutsche Bank are observing in our regular client interactions. In particular, one trend is leading the pack, which is the trend towards the direct-to-customer, D2C, which basically means that the direct access to the end customer is very much important. And we see the advantage of the so-called platform economy, which basically tells you that the access to the end customer is much more relevant from a value chain perspective than the manufacturing of the goods and services in the first place. And in many industries, unsurprisingly, that is already a very dominant picture in the B2C business model. But it's also very much emerging into the B2B market. And the B2B market is a much larger market than what we already see as a strategic reality in the B2C space. Now, this trend also means that the use of e-commerce model and industry-specific platforms have picked up speed significantly, and that brings treasurers much closer to customers as they optimize their digital payment infrastructure, but also safeguard the financial customer data. And with this rapid growth, the requirements placed not only on our clients, our corporates, but also banks will change with it. As going online becomes the more new normal across many industries, treasurers are contending still with managing old issues. Just call out the foreign exchange risk. But they do so through a much newer and more complex lens of high volume, cross-border digital sales channels. Beyond this, treasurers are also now faced with the task to deliver against user experience benefits, such as frictionless omni-channel shopping experience to end customers. And for companies, expanding their digital payment infrastructure, the top challenge that treasurers face was system integration, as cited by 39% of our respondents globally to the survey. So what all these business model transformations bring with them is that the role of the treasurer within the company is becoming significantly more complex, more strategic, but also much more significant. Treasurers move from an operational, finance function to basically keep the company afloat to a strategic enabler to the corporates and offering. Thirdly, and as the last argument, in addition to the transformation of business models, definitely also the change in market infrastructure, whether it's driven by political, by regulatory, or simply customer demands, will definitely not stand still. And if you just count the topics of, digital central bank currencies or digital central bank money, open banking overall, real-time treasury models, but many, many, many more, it becomes quite clear that none of us, neither we on the bank side nor you on the corporate, on the consumer side, will get bored in the years to come. And starting that journey as a highly regulated institution with very long-term relationships with the relevant regulatory authorities in the field of the financial services can, to me, only mean that we start with a big structural advantage. Many non-bank financial services providers have grown businesses and business models on the basis of lighter or even minimal regulatory constraints. That has resulted in business models providing the utmost client experience in the front end, and clearly something that we from time to time need to get envious and are envious of. But it also meant that many of those business models are not yet ready for growing into a responsible and risk-controlled business model at a much larger scale. And clearly that is an aspect that regulators will put much more close watch on and also put much more controls in place, not just in light of the recent examples such as Wirecard, Greensill, and many, many others. So with that, I believe it goes without saying that the payment space remains a very dynamic and very exciting area. And all of our jobs, will stay as exciting or become even more exciting as they are today. But now I'm very much looking forward to very much hearing, your thoughts in the respective payment roundtables, what it means to the different strategies, to different companies, around how to approach that, exciting market, best possibly. So very much looking forward to it. Thanks for listening to my words, and looking forward to exchange views with all of you over the next couple of hours and the rest of the day. Thank you very much.